Welcome to Business Morning right here live on Channels Television. It's another trading day right here in the nation's capital, and definitely I almost did not make it to work today, but thank God finally made it and able to do the show here. Shout out to all the security agencies out there trying to clear out that traffic on Cara Bridge, and hearts go out to those that have been affected by the accident right there. But let's get straight to what's playing out today. Nigeria stock market, that's for yesterday, extended its losing streak with investors wiping off about 693 billion naira from the market capitalization. That's for the local exchange there. We see sustained sell pressure. Losses in major blue chip stocks like Beta Glass, John Hope, E-Transact, International, Champion Breweries. That dragged the market value down to about 97 trillion, 97.91 trillion. We see a big drop there, 0.70%. I guess nothing goes up forever when it comes to all these asset classes. Trading activity, we see that also weakened there. But the top trades, Tantalizers, Sovereign Insurance, Axis Core, that's in financial services, 38.63 million units traded. We see declines across volume and turnover and deals count, despite the market's strong year-to-date gain of nearly 50%. This market is up about 50% so far. What else is getting such a profit right now? It's like gold right now, but it depends on which stocks you're actually invested in. But let's check another asset class now, oil. Oil prices fell slightly. Asian trade today is bigger now, 0.69%, $64.47 a barrel. That's for Brent crude. That was the biggest drop earlier today. WTI crude, $60.09. Back above that $60 level. That's for WTI, but it's now 0.69%. We're still seeing that trading range there between $58 to about $66 per barrel. So definitely we'll keep tracking this and find out what's driving sentiment later on the show. All right, so other stories now. The Senate and the House of Representatives have approved President Tinubu's request to implement new external borrowing under the 2025 Appropriations Act. The approval allows the government to raise 1.84 trillion naira, about $1.2 billion at the official rate, to help finance the 9.27 trillion naira budget deficit. Lawmakers also authorized the refinancing of $1.12 billion. Eurobonds due for maturity is coming up November 21st, 2025. In addition, the National Assembly approved plans to issue a debut $500 million sovereign sukuk in the international capital market. There we see the government trying to raise funds right there for infrastructure. So other stories, company news, Nigeria's leading cable manufacturing company, Coleman Technical Industries Limited, marked another major milestone yesterday with the commissioning of its second fiber optic factory in Shagamu, Ogun State, southwest Nigeria. The event, which also coincides with the company's 50th anniversary, is seen as a significant step towards advancing the nation's industrial and digital transformation agenda. Minister of State of Industry, Trade and Investment, Jumoke Oduwole, and the company's managing director, CEO George Onofowoko, spoke on their expectations from the multi-billion state-of-the-art facility.
This plant is not only a new line on a factory outlet, it is a strategic asset for the Nigerian economy's competitiveness. In a world where data is the new essential infrastructure, local capacity in fiber optics reduces import dependence, conserves foreign exchange, creates quality jobs, and positions Nigeria as a regional supplier into the rest of Africa under the African Continental Free Trade Area.
The factory we are commissioning today is single-handedly the largest fiber optic cable factory by capacity and the first fiber optic reinforcement plastic FRP manufacturing factory in Africa today. We have constructed a copper and aluminum smelting plant of 3,000 tons per month of aluminum, 10,000 tons per month of copper cathodes processing in country, making us able to process over $130 million of cathodes and ingots in country in Nigeria per month.
All right, right, so definitely we'll get you more details on that with a full report later on. The MTN Foundation has awarded scholarships to 1,052 students with a disbursement of 300,000 naira to each of the students through its 2025 scholarship and induction program. The executive director of MTN Nigeria Foundation, Brian Sonia, who is speaking at the 15th edition of the MTN Scholarship Ceremony in Victoria Island, Lagos, says the initiative reflects the foundation's investment in academic excellence, which is being replicated across the 6 geopolitical zones of the country to ensure no child is denied education because of lack of funds.
The yellow, colorful atmosphere says it all. It's the 2025 MTN Scholarship and Alumni Induction Program, an annual event conceived by MTN Foundation in 2010. The program supports students in public tertiary institutions with grants under the categories of MTN Scholarship for blind students, science and technology, and best top 10 candidates in the Unified Tertiary Matriculation Examination.
This scholarship initiative was built on the belief that every student has the capacity to soar. And since its inception, the MTN Scholarship Initiative has supported over 5,000 scholars and awarded nearly 15,000 scholarships. Each name on that list is a list of potential unlocked.
Beyond the financial support for over 1,052 scholars, the ceremony also marks the formal induction of over 300 graduating scholars into the MTN Scholarship Alumni Network.
Add value to be an agent of positive change.
Some of the best graduating students and new awardees tell their stories and express gratitude to the foundation.
MTN Foundation relieved us of a very huge financial burden throughout our years in school. I was awarded the MTN Science and Technology Scholarship, and I must say this is a very great privilege which I don't take for granted.
The 15th edition provides another beacon of hope for the students coming on board.
This program is about more than just financial aid. It has the power to change lives. Its beneficiaries have become innovators, researchers, professionals, and entrepreneurs who are actively shaping their communities.
It aligns with MTN Foundation's broader sustainability vision, particularly its youth development portfolio.
We recognize the need to support the development of talent in STEM specifically, which are critical areas to power Nigeria's industrialization. This initiative is also aligned, of course, to 3 of the United Nations Sustainable Development Goals, as well as MTN's ESG agenda.
From day one, we were clear that it was people over profit. It was purpose, before profit. And that is what has led MTN to be, the largest telecommunications company in Nigeria and in Africa. Today,
MTN Nigeria Foundation says it has awarded over 14,700 scholarships to 5,349 scholars since inception. And this new set has to prove an unmatched academic excellence in the next 1 year to renew their scholarship and give back to society through knowledge transfer.
And now to our first conversation. Definitely this is a trending matter right now. State of the states and the subnationals. Enugu State has been ranked as the most fiscally viable subnational government in Nigeria. State most likely to survive without federal allocations. That's according to Budget State of States 2025 report. It's a remarkable milestone, especially in a time when most states depend heavily on FACT disbursements. Today we speak with the Honorable Commissioner right there, that's in Enugu State. To be joining me via Zoom, Dr. Nathaniel Emeka Urama is Commissioner for Finance and Economic Development in Enugu State. I guess we're trying to hear it now from the horse's mouth at this point. Great to have you on the show, sir. Good morning.
Thank you so much.
And congratulations on this.
Listeners.
Yeah, congratulations on this ranking. I guess this is quite the feat at this point, being able to survive without, FAC allocations. So the report names Enugu as the state most capable of surviving without FAC allocations. What would you say are the, major, policies enacted by this government to actually get you to this stage?
All right, thank you, and good morning, Nigerians. Yeah, I think I will start by telling you that what happened in Enugu State is a planned something, is in accordance with our plan. In 2023, when this administration of His Excellency Minister Dr. Tinubu assumed office, the first thing we did was to basically look at the revenue generating programs in Enugu State, because we are aware that the only thing that we can depend on entirely is that of the internally generated revenue, given that the federal allocation is entirely exogenous to the states. So we did a critical review of the states of IGR in Enugu states. Through that means, we're able to find out the loopholes, what is being done wrong, and those ones that are not being executed at all. So by that means, we're able to develop a strategy to ensure that we optimize our IGR without jeopardizing the business environment. So the first thing we identified was the loophole in the revenue collection. There were leakages, money being collected from the citizens, but it doesn't get to the government purse. So the first thing we did was to enact an e-transaction to stop collection of IGR via cashless. That actually boosted the IGR of Enugu State to a great length. Then when we resumed office, we're having only one payment gateway in Enugu State. And when the payment gateway is down, you find out that it will be difficult for people who are willing to pay their tax to be able to do that. So to avoid this problem, the second step and from having to the 6 we are currently having. Sorry,
I can hear you, but we lost you for a moment there with the internet freezing for a moment there. But by understanding some of these strategies, blocking leakages, so that means I guess the government was getting the correct revenue, at the time.
There's an internet issue. I don't know if it's from my side or from you.
Yeah, I'm sure it's from whichever side. But you can hear me now, right? Hello, Dr. Nathaniel, can you hear me?
Can you hear me now?
I can hear you, but can you hear me?
Can I go on?
Yes, you can. You can go on. You can go ahead.
Okay. All right. Okay. So what I said is that the second step we took was to expand the payment gateways. From the one payment gateway we had, we are now currently having 7 of them. This also enhanced the revenue collection in such a way that people are now free to use different payment gateways. And when one payment gateway is down, it doesn't obstruct the payment of taxes by individuals who are willing to do so. By transacts, where every payment of IGR in Enugu State is now done by electronic means. No cash collection of any means and of any form. This is the second step we took. Next, we were able to sensitize the citizens, creating awareness of the taxes they're supposed to pay, the dividend they're going to obtain from paying the tax, and how they should pay the tax to ensure that whatever money they remit gets to the government purse. With this, we're able to also increase the IGR collection in Enugu State. Then we went ahead to activate new tax process that were not in existence. There was no new tax introduced, but we were able to activate the new ones. That also led us to entering into the informal sector, where taxes have not been collected before, and the fees that were collected end up on private purse. So we're able to use the e-payment platform to approach and enter the informal sector. And I must confess to you that being able to access the informal sector boosted the IGR collection in Enugu State to a great extent. We also knew that the efficiency of any tax system depends on the capability of the staff of the the state's internal generating revenue. So from the inception, we've been not relenting on boosting the capacity of the IGR staff. We'll be having frequent training upon trainings, to ensure that the staff that are involved in internally generated revenue collection in Enugu State are well equipped, both with the technology and the capacity to be able to collect the tax in a way that it will not jeopardize or negatively affect the business environment.
All right, so Dr. Rama, thank you so much for breaking that down for us. Expanding, payment gateways, making sure that if one payment gateway is down, another one is there for collection, which helped in expanding revenue collection. Then no cash collection. That's a very critical one, I guess, and using more of digital platforms. Quite interesting strategies, but was this part of a long-term fiscal reform plan, or were they just, recent interventions, responding to economic realities?
No, we also have a long-term reform plan to ensure that there is sustainability in what we're doing. I'm also telling you that as we're discussing, Enugu State is one of the first states to grant autonomy to the IGR, to the Enugu State Board of Internal Revenue. They are now autonomous. So that will grant them that liberty to be able to implement programs, to initiate programs, and implement it without being constrained by unnecessary bureaucracies. These are part of the long-term plan that are being implemented in Enugu State to ensure the sustainability of these moves we have made beyond even this administration. So all the programs we're doing, we're looking not only within the administration, but beyond the administration in such a way that we do it to ensure that it is sustainable. So this is one of the major steps we've taken. Okay, ensuring a long-term plan of these programs.
All right, so talk to me more now about how much you've grown, IGR over the past years as internally generated revenue, and I also want to know what sectors are contributing the most, to this performance in Enugu State.
Sorry, I didn't get you clearly.
Yes, I'm trying to understand the amount of IGR you've been able to raise, as a state, so far in the past few years, and what sectors are contributing the most, to your IGR in the state.
Okay, let me give you the history. By 2022, the total IGR collected in Enugu State was 26.8 billion. And the growth rate from 2021 to 2022 was just 0.3%. By 2023, we started halfway 2023. The IGR increased from 26 billion to 37.9 billion. That is a 40% increase. By 2024, the IGR increased to 180.5 billion naira. That is 381%, and that is actually what led to the position that the Enugu State took. Now, as I said, and during my earlier speech, the bulk of this collection came from blocking the loopholes and also trying to make use of the informal sector, to collect tax from the informal sector. Now, Enugu State is also building capital, the infrastructure, to ensure that Enugu State is business friendly. Because of this, you see that enterprises are coming into Enugu State, and that is actually boosting the revenue that we're collecting from the enterprises. So generally, the revenue boosts between 2023 and 2024 came from blocking the loopholes, ensuring that all the tax collected goes into the public purse, and also trying to enter the informal sector. So that is where the bulk of the growth in IGR between 2023 and 2024, which led to the position that Enugu State had, came from.
Yeah, quite an interesting one. Blocking those leakages is definitely a tall order for some states now, because if you can look at the bottom five, that's the bottom five least viable states according to budget. We have the likes of Yobe State, Benue State, Jigawa State, Kogi, and Imo. These are the least capable of surviving independently of fact. So we see that many states struggle, with broadening their tax base also, without overburdening the citizens, because increasing tax base sometimes doesn't really need, it doesn't have to be, increasing taxes. So how is Enugu achieving, higher revenue collection while keeping the business environment, friendly? That means we're not overburdening businesses with taxes.
Okay. I think the first thing we did, the business environment is wider than only tax collection. When you are collecting the tax and you're using the tax to improve the business environment, like if you listen to people that have visited Enugu State of recent, you see that security is enhanced, road infrastructure is built, electricity tariff is reduced in Enugu State. Recall also that Enugu was the first state to get autonomy in power generation. All these things are what combines together to ensure that, yes, there may be increase in taxation, not that Enugu State introduced any new tax law. We didn't do that. What we did was to try to enforce the existing tax law. But in addition to doing this, the people are seeing that the money being collected is utilized to make the business environment friendly. You have a convenient road, you have security, you have power supply at a very low rate, and the facilities are there, and that justifies why business are trooping into Enugu of recent. So the tax collection we are doing is in such a way that not only that we don't introduce new
Yeah, I guess the internet again.
But also that the taxes collect environments.
Okay, Dr. Nathaniel, I lost you for a moment there. Can you hear me?
Yes, I can hear you, though it's cracking, but I can hear you.
Yeah, okay, fantastic. But I can hear you now. But, just a quick one. Have there been reforms in your digital tax systems, any incentives for compliance or partnerships with local businesses, to achieve, balance when it comes to, tax collection and compliance to tax payments?
Yes, we do have incentives for compliance. That is, even there are others that we're planning, and there are ones that are already effective. We have incentives for adherence to tax. Like what we did is that we have different ways of paying your tax. Those who want to pay it annually, those who want to pay quarterly, those who want to pay monthly. There are different incentives for people at different levels that do comply to tax without being enforced. And there are also penalties for people who wait to be enforced before they pay their tax. And the major thing that led to what we are doing is awareness creation and giving them a long notice. Like what we do in Enugu State is that your tax liability is communicated to you early enough, and you are given ample time to be able to do that payment. So if you do it within the time given, there is incentives created for you, which details I may not expose here, but so there is penalties for not paying the tax within the time given. So if you allow our tax enforcers to come to your establishment before you pay your tax, there is a penalty. But if you pay it within the stipulated time, there is incentives for them. So that is also part of the efforts we're making to improve tax collection in Enugu State.
Yeah, Dr. Nathaniel, I'm sure at some point you'll be able to tell us some of these other secrets that you're using to to achieve what you've achieved so far in the state. But let's talk about what would you say are the key non-oil or non-federal sectors Enugu is investing in to sustain this independence, for like the likes of agriculture, technology, real estate, or is it manufacturing? What are you investing in?
Sorry, it was cracking. I didn't get you very well.
Yeah, sorry again about that. So I'm trying to find out, what sectors, Enugu State is investing in to sustain this independence. Are you investing in agriculture, technology, and maybe real estate or manufacturing?
What is going on in Enugu State currently is tremendous. His Excellency Governor Peter Ndubuisimba did not leave any sector. I must tell you that there is a priority, but our investment, though we have priority for education because we are talking of sustainability. Education, health sector is a priority, but agriculture is also the area we are embarking on. Tourism is also the area. So what the infrastructural development and the investment we're doing in Enugu State costs across all the sector. But to answer your question directly, the priority ranges from education, because we know that education is the key to any sustainable development. Then health sector, health is wealth in accordance with the formal language. Then we have the agriculture, we have the tourism industry, we have the sports, even the gaming commission. We are expanding our investment across all the sector. And I'm telling you that even other states are sending their IGR team to Enugu State for us to enlighten them on how we're able to achieve the feats that we have achieved. So it cuts across all the sectors, but what we are doing mostly is to build the background that will attract private investors into Enugu State to ensure sustainable investment and also a greater economic growth.
And are there upcoming projects or private sector collaborations that we should be looking forward to?
Yes, there are. Because as I told you, what we're working based on plan. We started by saying, first, let's create the environment that can be conducive for private sectors to come in. The next step we are taking now is to collaborate with the private sectors, because most of this program we're doing, like if you look at Enugu now, we're having Enugu A. That Enugu A is not being run by Enugu States. We are collaborating with the private sector under what we call the PPP. The same thing is happening to the agriculture. We buy the agricultural equipment, but we collaborate with the private sectors to ensure that there is efficiency in the management, because we know that public sector managing those investments may not lead to efficiency and sustainability. So most of all the programs we're doing involve the private sector under what we call the private partnership agreements. I don't know if this gets answer to your question clearly.
Yeah, thank you so much for that. I did fly Enugu Air recently, and I'm curious. I'm sure you guys are making a lot of money from that segment.
Yes, we are. Yes, we are. But you should also know that there is time for investment and there is time for reaping. What we are doing now is that we are investing. We are sure that the time for reaping is coming, when all these are going to reflect into increased IGR. To be honest with you, the plan of His Excellency Dr. Peter Ndubuisimba is to ensure that Enugu State can not only sustain their recurrent expenditure, but even capital expenditure without going to Abuja.
Fantastic.
That is the plan.
All right.
By the time all our investment now ripe up now, by the time we start reaping from all this investment, both in education, both in health, in agriculture, in tourism, and everywhere, you will see that this, though a bogus plan, is realistic.
Fantastic, and definitely we'll keep our eyes on Enugu State to continue to watch how you manage to keep this up. Thank you so much. It was great having your perspective. Dr. Nathaniel Emeka Urama is the Commissioner for Finance and Economic Development, Enugu State. Thank you for giving us some of your secrets there on how you're able to get this ranking on the budget index there. Thank you so much, sir.
Thank you.
All right, we'll take a break now. When we come back, we'll find out what's playing out in the commodities market with oil and definitely the latest rate cut in the U.S. That's in a moment. Just stay with us. Welcome back. Well, let's shift conversations now. We have Mr. Bismarck Ruani joining us as the CEO, MD CEO of Financial Derivatives Company. Great to have you on the show, sir. Good morning.
Good morning.
Fantastic. It's good to have you, sir. It's been a while. I just got to just in right now. We'll get to other matters, affecting the economy. But I just got to just in that President Tinubu has approved the introduction of 15% ad valorem import duty on petrol and diesel. These are the reports I'm seeing right now. First off, Mr. Rani, we're going to confirm this very soon, but what is the expected impact of this?
I didn't quite get the question.
So, reports that President Tinubu has approved introduction of 15% ad valorem import duty on petrol and diesel.
I'm having difficulty understanding or getting your question. If you can come again.
I said we just have a just in now. We have reports right now that President Tinubu has approved the introduction of a 15% ad valorem import duty on petrol and diesel. I'd like to get your reactions to the impact of this to Nigerians and the economy.
Okay, look, I heard you right. I think you said that the price of petrol and diesel have been brought down just this moment. If that is your question, then what I would say actually is that the price of petrol is critical as a major inflation causative factor in Nigeria. If a drop of 3%, because the drop of 3% is significant, because we had a 11% increase from 841 all the way to 922. So that's significant, and it's a major driver. If I also understand the narrative, it is that the Dangote refinery, I understand, is actually bringing down the price and is guaranteeing that there will be no scarcity between now and Christmas season, and also that there will be no price increases. That's what my understanding of it. But I didn't quite get it.
Yeah, so I'm trying to understand, sir. Imagine now there's an 15% import duty on people bringing in petrol and diesel into the country. Is this bad or good for us?
I think that an import duty for those bringing in petrol is good for the country. Why it is good? Because you want to encourage domestic production. Anytime you import, you are actually encouraging and creating jobs in other countries rather than creating jobs in your own country. So basically, import protection is good. That's what is happening in the United States. That's why tariffs have been introduced across the world. But in terms of pure macroeconomic terms, it doesn't make sense for you to have all of those tariffs. A free trade world and a world of what we call comparative advantage for countries that have cost of production benefit or advantages is good for the world. Total production will increase. That's what Ricardo, if I remember right, proposed.
All right, so is it possible, or is there a risk that we can expect higher diesel and petrol prices with a 15% import duty?
No, what it means is that don't forget that the Dangote refinery and the domestic refineries are high volume, low margins. What has happened is that the average cost of their production will come down, and therefore the fringe players who are importing will have to pay more, and that will encourage domestic production. I want you to remember that the same thing happened in cement, the same thing happened in sugar. Then there was some protection, and that actually increased cement. Nigeria, from being a net importer of cement, now is a net exporter. You have Goa, you have Dangote, you have Lafarge, and all of these people producing because of the protection of the past. But if it's protection just for consumption purposes, it doesn't make any sense. So this, as far as we are concerned, anything to protect domestic investment and domestic industry will lead to further growth, more investment, and more employment. Look at what happened to the breweries. You have Guinness, you have Nigerian breweries, you have Champion, and all of these guys. If you want to import beer, you can import beer, you pay a duty, you pay a tariff, but it's going to be very expensive. And what we've seen all of and the building material sectors expand capacity, increase production, increase employment, and more than anything else, paying dividends to the investors and paying taxes to the Nigerian government.
All right, so thank you for that. We'll definitely get more on that breaking news there, and we'll definitely continue to discuss the expected impact. But I guess no cause to panic at this point. But let's shift to monetary policy now. We didn't get the latest rate cuts in the U.S. Another 25 basis points. I guess this was expected. Any hidden undertones?
Okay, let me say this clearly. The cut of 25 basis points was expected yesterday, but the guidance that the Federal Reserve Chairman Jerome Powell gave was that a cut in December of another 25 basis points is not a foregone conclusion. As a matter of fact, he's looking at the balance of risk, both domestic job, employment, and inflation, and he thinks that it is most unlikely, for that matter, that there will be a cut in December. If that is the case, it means that in Nigeria, one, we had anticipated that there will be two cuts, 25 in October and 25 in December. Means that 50 basis point cut means that the dollar will weaken. It means that there will be more demand in those countries because the increase in business activity. But now, for Nigeria, we are also benchmarking our interest rate activity to that of the US. So one can easily say that the Central Bank of Nigeria will probably be caught between a 50 basis point cut and a 25 basis point cut. Will now have to wait a little bit, and probably I think that what you're going to have for Nigeria, the MPC will probably cut rates by 25 basis points this time rather than 50. And also, Nigeria is raising money in the Eurobond market, as you can see, and therefore the lower interest rate environment in the US will help us, will reduce our debt service cost. So for us, one, the cut of 25 basis points and the ambiguity about what's going to happen in December means that we have to slow down our own cuts at the November meeting by the central bank, and also our expectations that I think that because of that, foreign petroleum investors that are coming into Nigeria will probably hold back a little bit because they think that interest rates will remain higher. But having said that, Ladi, I must comment that Jerome Powell is on his last leg. He leaves the chairman of the Federal Reserve in May next year. As a matter of fact, next month they're going to name the nominees that will take over from him. And therefore, for now, we should expect that interest rates remain rather stable after this cut until January, right? And that means the dollar will not a slowdown in the cut means the dollar gets stronger. Then if the dollar gets stronger, then for us in Nigeria, where we have been getting the naira appreciate, and if you see that happen, the naira has appreciated quite sharply. We will probably see a slowdown in that rate of appreciation.
All right, so, still looking at the votes, that's for the FOMC. Definitely there was another dissent this time, and, we did get from the newest man on the panel there. He did say I think he wanted another cut, maybe a bigger cut, at this point. But by what we're seeing, playing out so far, do you think there's another cut expected this year in the U.S.? And if it doesn't happen, what's the expected impact of that?
I think viewers and investors they're all waiting and anxious to say what will the Naira dollar rate be. The Naira dollar rate in the current market today is 14.75. At this time last year it was about 16.50, right? So the Naira has appreciated sharply this time. What happens in the last quarter of the year? Three things. One, we prepare our budget for 2026. Two, we have the main crop harvest for cocoa, and you can see the price of cocoa is about $6,100. And also, we have the dirty December and the visiting friends and relatives who are coming in, and that's the carry-on of the dirty December. So we think that we are watching out for. We also have the end of the harvest season, and we've seen price of commodities actually drop. We've seen rice at 72,000 because the Indians have lifted the export ban. We've seen the price of pepper, price of tomatoes, price of plantain, and all drop. And so we're having the steady state for now, and which means that the price of data, but with the price of petrol now stabilizing and probably coming down a little bit, thanks to the Dangote refineries pledge, we are going to see a very, very active November-December period. So one, prices are down. Two, the petrol price will not translate into higher price, and there will be no queues, no queues at the petrol station. And three, the Naira will appreciate because of visiting friends and relatives for the dirty December.
Dirty, that's maybe times 4, times 3. I'm looking forward, to this December, even though I know I'll be working still, but, definitely we'll try and have some fun this time. But, sir, we see President Trump has concluded meetings with leaders from China, South Korea, and other Asian countries. I guess Trump did say that the meeting with Xi Jinping was quite good.
Yes, he said the meeting was amazing, and he gave it a score.
Yeah.
He gave it a score of 12 over 10. It's amazing, but what we are seeing is that the Southeast Asian countries have all come together very sharply to work on something. They know what their interests are, and they believe in the doctrine of permanent interest and no permanent friends. So what we are going to see is a slight reduction in the use and dominance of the dollar in global markets. And guess what? The currency that is benefiting from this more than any other country is the Australian dollar, the Japanese yen, and to a large extent the euro. So these are interesting times and totally unpredictable. But generally speaking, we think that globally, after what's happening in Gaza, we think that there's some element of stability, and there will be no sharp rise in global commodity prices in the next month or so.
Right, and so also top on the list there, we see the supply growth, money supply growth, that fell 7% year-on-year in September from about 11.66% in August, lowest since 2021. I guess the mopping up activities of the central bank, I guess that's working.
Yes, the central bank has been very, very, very prudent in the way it managed and proactive actually in the way it's managing money supply growth. For it to get to the lowest level since 2021 is significant. Two, there's also high-powered money. So while on one hand, money supply growth has reduced, high-powered money is also being constrained because of the reduction in intervention activities of the central bank. But we are seeing cash in the average opening position of banks is about 4 trillion naira. So what we saw last week was an increase in the treasury bill rates, and so there is this trade-off between tight liquidity and tight cash. So cash is part of liquidity, but liquidity in the banking system, right, is different from cash in circulation. So all of those things are happening together, and we think that generally speaking, if the money supply growth is constrained and kept in check, that will help to moderate inflation, because inflation was 18.2, and now we are projecting that it
She can't join. Network issues.
They should not understand the condition by which we are doing this. The truth getting is not solved. So
kind of translates to the decelerating inflation that we're seeing so far. But, at this rate, Mr. Rani, do you think in 2026 we might get into single-digit inflation, at this rate?
Right. I think that what we are seeing is a moderation in inflation. But there are fears that if something happens, if the price of oil drops to $60 a barrel and the government's revenue actually begins to decline, then our fiscal deficit the other way. But I think one thing we must bear in mind is that the budget for 2026 is going to be announced any moment from now. And the basic parameters and the assumptions for that budget, which will be the price of oil, and we think the benchmark price will probably be about 65. We think the production levels will be at about 1.6 million barrels, which is OPEC 1.6 to 1.7 million barrels a day, based on the OPEC increases. Therefore, generally speaking, there will be stable macroeconomic conditions in Nigeria, but we have to watch out for the impact of the drop in the price of crude oil, which could actually affect us negatively.
Watching that range trade for a while now, it almost gets to $70, then crashes down. That's talking about Brent, and WTI gets below 60, then gets that bounce back up. But we've been trading in that range, most of this year. But looking at the domestic commodities market, what are you seeing coming, sir?
Domestic commodity prices, like I told you earlier, we've seen domestic commodity prices drop, and they've been flatlining. But one of the most interesting commodities is rice, and you can see that there. Rice is at 72,000. We've seen beans at 70,000. Now we've seen tomatoes at 65,000. This is going in the basket. But one thing that we've noticed recently is turkey and chicken prices, which are moving in opposite direction. Turkey price had come down, but it's going back up again, maybe because of import restrictions. But generally speaking, we've seen onions stay flat at 140,000 and garri at 22,000. So the price of food in the food basket came down and is staying flat. But what we're seeing is that people are eating less in quantity, and even more so, they are eating less again in quality. So quality all falling because the pockets, people's incomes are actually stretched at this point in time. So again, we are waiting for later December that maybe the money that will come in from our visiting friends and relatives will help show
I guess Mr. Ronnie, we're waiting for the I just got backs to come and help us with some funds here. Thank you so much, Mr. Ronnie. Always great having you, sir. Thank you so much, sir.
Thank you for having me.
All right, we'll take a moment now. When we come back, Global Matters. That's in a moment. Just stay with us. All right, let's look at what's playing out in the global space. Now we're seeing Samsung. They posted strong Q3 profit there. The increase for the third quarter, that's for net profit. Its semiconductor business, we see that rebounded strongly, driven by growing demand for AI chips after falling behind smaller chip-making rivals in supplying the HBM3E products to NVIDIA. Samsung is working to gain ground as companies compete to commercialize more advanced HBM4 products. During an earnings call, Samsung executives stated the company was supplying its HBM3 products to all customers and offering HBM4 sample products for client testing. And to the automobile industry now, see Volkswagen reported a third quarter operating loss of 1.3 billion euros after being hit by heavy charges linked to U.S. tariffs and strategic changes in its Porsche unit. The result compares with a 2.8 billion euro profit a year earlier, but came in slightly better than the 1.7 billion euro loss expected by analysts. That was polled by Visible Alpha. The automaker said tariffs, along with costs and write-downs tied to Porsche's product overhaul, resulted in 7.5 billion euro in charges for the first 9 months of the year. The group transitioned to electric vehicles. That also continued to pressure profitability. That's the transition to electric vehicles. Then Hyundai Motors logged a drop in third quarter profit today as high U.S. tariffs on automobile imports and parts that weighed on the South Korean automakers' margins. Hyundai clocked in operating profit of 2.54 trillion won. It's about $1.7 billion for the 3 months ended September 30th, down 29.2% from last year. But the figure met Reuters and Bloomberg estimates. Q3 revenue rose 8.8%. to 46.72 trillion won, but the company's gross margin deteriorated to 17.7% in Q3 from 19.8% a year ago. Now, Samsung largely maintained its position as the world's best-selling smartphone brand in the third quarter of 2025, while Apple, a close second. That's data from analytics firm Omdia that showed that today Samsung Electronics Co. Limited shipped about 60.6 million phones in the third quarter, up 6% from last year, and a market share of 19%. While Apple Inc. Shipped 56.5 million phones, up 4% year on year, with a market share of 18%, and that's according to data from Omdia. Chinese electronics giant Xiaomi was the third largest smartphone seller, moving 43.4 million units at 14% market share, while China's transition took the number 4 spot with shipments at 28.6 million with a 9% market share. The company benefited greatly from demand in Africa, and that's according to Omdia. And the Bank of Japan, they left interest rates unchanged today, meeting market expectations for a hold as the central bank grapples with increased economic uncertainty and a looser fiscal outlook. Central bank reiterated its messaging that it will consider or continue to hike interest rates and tighten monetary policy if the economy and inflation move in line with its forecast. The BOJ slightly hiked its outlook for gross domestic product growth and consumer inflation in the fiscal year for 2025, but cut its growth forecast for 2026. All right, that's the show today, and definitely looking at the terminal on investing.com. We're still trying to get direction for the local boss today. It's been back-to-back losses, but we'll see if we get a green close somewhat today. We'll bring you more updates by 1:30 on Business Incorporated. It was playing out with most of the markets that we track. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. Have a profitable day. Bye-bye.